Hey, I'm Gene Goldman, and here's a look at the week ahead for the week of January 23rd. Well, last week, U.S. stocks struggled. They were a little bit lower. On the good news front, there are signs that the aggressive Fed is biting into inflation. We saw the producer price index come in lower than expected. On the bad news front, there are signs that the Fed is biting into the economy. Retail sales, manufacturing all came in well below expectations. All of this has increased recession worries, and this is driving overall market concerns. Case in point, Gallup released a poll just a couple weeks ago that said 79% of Americans, 79% of you and I believe that we are headed for a year of economic difficulty. We also at Cetera Investment Management think that a recession is very possible, not definite, but very possible. The data says this. Rising borrowing costs are pressuring the economy. We're seeing a declining savings rate. Leading economic indicators, like you see right here, are falling pretty quickly. The yield curve is inverted. This is making it tough for banks and financial services companies. You're seeing rising credit card debt, and then you're seeing overall weakness in manufacturing. But can 79% of Americans be wrong and the data be wrong? In other words, are there reasons why we could not and may not have a recession? And there's three things we can look at. Number one, GDP, U.S. economic growth is still pretty strong. The Atlanta Fed GDP now data, which you see right here, on the back of a strong consumer, is pretty strong. It's very, very strong for the fourth quarter. It's going to take a lot to get this to be negative to push us into a recession. Second of all, the US dollar is weakening. As you see here, the dollar is down about 10% in the past 3 or 4 months. This is great for US exports, good for the economy. Third of all, the wild card, China is reopening. China's reopening is a wild card which should help drive the overall global economy. So the overall takeaway this week is that the indicators suggest a recession is in the cards for 2023, and 79% of you and I expect it to occur. We also think, given the data, that a recession is possible, but there are some clear reasons why we may not have a recession. And as we've said before in these videos before, that if we do have a recession, we do expect it to be mild. Two areas that the Fed is focusing on to slow inflation, housing and labor, are very strong. It's going to take a lot for these to come down. Second of all, we don't see a steep recession. We see a mild recession, one that rolls through the economy. It hits certain parts of the economy at first and then rolls through the rest of the economy, not hitting everything at the same exact time. No steep decline, no steep recession. Thank you for listening. For more information, please follow us on Twitter at CeteraIM, and we'll see you next week, and thank you.